The information in this podcast is current on the day of recording. It is general advice only and does not take your personal situation into account. It may not be suitable for you. Participants in this podcast may also own the stocks discussed.
Welcome to Stock Take. My name's Gaurav Sodhi. Joining me today is analyst James Carlisle. Hey, James.
Good morning.
And all the way from Vancouver, I think we're disturbing his dinner, but is Graham Whitcomb. Hey, Graham, what's the time over there?
Hi, Gaurav. It's only 5 p.m. now, so...
Oh, that's okay. Although,
good.
do you know, since I've had the second child, who's 3 now, I've been having dinners, I reckon, at about 5:30, along with the kids. And then I have a secondary dinner after they've all been put to sleep. And that would explain a lot, actually, about the dad bod that's been growing around me.
Helps you sustain your energy.
That's good though to eat with the kids. I think that's something we've always tried to do.
agree.
I think it's a good thing to do.
Well, they
Get
kind of
lots
expect
conversations.
it as well. Well, the conversations are just painful, really.
Well, yeah, but look,
a lot of why.
Yeah, well, that's good. You see, that's healthy.
Yeah, no, it's probably the right question to ask, isn't it?
Yeah.
If only we had the answers. Now, speaking of answers, JC, Woolies. Let's talk about that and the Endeavour split. I noticed you wrote it up this week. Woolies is a business we've recommended for a while, actually. We've sort of had it
a little while ago. We haven't had it on as a buy for a little while, but we did for a bit, and then it moved to hold when everything went wrong. Everything went wrong for it, and yet the share price is actually... We were buying it high 20s, I think.
That's right.
We actually had a buy up to $36 at one point, and that looked woeful because it got down to $20, didn't it? When it was going through a few problems a few years ago.
I remember that was very contentious at the time.
Yeah. Well, look, buying at 36 wouldn't have been a great plan. But
it would have worked out okay.
Well, look, we're $41 or $2 now, but the market's probably done more than that. But anyway, look, it hasn't been a disaster, and I guess that's what you get from Woolies, isn't it? You don't expect too many disasters.
Well, this is what surprises me, because usually, so Woolies has announced this spin-off of part of the business, and ordinarily you get these announcements when businesses are doing poorly or they're under pressure, or things are going disastrously, and none of those things are really true for Woolworths, and yet we've got this very large split of part of the business. Just explain to us why Woolies is looking to split and exactly what assets are included in the new group.
So I'll do those in the reverse order. So it's splitting off its liquor assets, which is Dan Murphy's BWS. Are the main things on the retail drinks side, on the drink stores, bottle shops. And then there's a bunch of pubs as well, which is ALH Group, which owns lots of mainly pretty good quality pubs around the country. And the reason for splitting it off, well, it goes through a whole bunch of reasons, all the sort of normal things, which is to give it its own sort of strategic focus and its own stronger brand clarity, pursue its own strategy and growth agenda, which means...
But all those things were true 5 years ago, they were true 10 years ago.
That's what I thought when I read all of those reasons.
Yeah, that's true. That's true. All of that was true. Look, I suppose these businesses have grown up gradually within Woolworths. So, there comes a point where they get big enough to say, well, I'm only trying to defend the indefensible, really. But the main reason I think that they're splitting it off is because shareholders would prefer to be able to invest in it without the ethical issues of liquor and pokies.
Yeah, that's remarkable, isn't it? The power of the ethical investor has grown so much that it's forced Woolies to act. I find that pretty incredible.
Maybe, but there's no obvious reason, I don't think, why you should. Some of these assets are co-located. So there is some reason, and they've got this extensive partnership agreement between the two companies, which, in fact, they didn't give a lot of detail about. But they're going to be working together on a bunch of things, supply chains, the digital media, and all that sort of thing, loyalty programs. So, it shows just how integrated they are, and they are shops, and a lot of them are co-located, and so you can see that there are some reasons for having them as part of the same group. But at the same time, it does provide some choice for shareholders. There's no point in otherwise we'd all have index trackers, wouldn't we? If everything was rolled into
Mm,
one giant company,
mm.
so ultimately it does make sense to have companies focused on particular areas, and also to give shareholders the opportunity of choosing different stocks with different defensive and return attributes, and also ethical attributes.
Yeah.
So the idea, presumably, is that by opening up to a wider set of shareholders, anyone who wants to own the liquor can still do so. They can just hold on to the Endeavour shares that they get out of the demerger, and they can buy more if they like. But if people only want to own Woolworths, then that opens up opens the stock up to those investors, and theoretically makes it slightly more attractive to own, and reduces therefore its cost of capital. That's the way they describe it in
Graham,
the.
Graham,
Sorry,
do
go
you
on.
think? Do you think? I mean, my view is that this is being driven by a stunning increase in the power of ESG funds. Does that make you worry about any of the businesses that not worry so much, but does that cause you to think about businesses that you own and whether the ESG drive affects them? Is this specific to Woolies, or should every company here with ethical concerns, are they going to be looking at the same thing as well?
It's funny. I think I have a different take on ethical investments than the majority, which is if they're selling something legal, then I would rather an unethical company be owned by ethical shareholders and ethical managements, and I feel like that's a better way of doing it than leaving it to the unethical people to run and to own and to get rich from.
Well,
So
that's a very good point, because when Woolworths talks about lower cost of capital, although actually I don't think they use those specific words, but that's really the drive of it. That's the sort of financial alchemy here. When they talk about lower cost of capital, what they really mean is lower shareholder returns. People accepting lower
Ah,
returns,
okay, yeah,
and
good point.
and
Mm,
and a higher cost of capital actually means the stock is priced to give higher returns.
mm,
So you end up possibly with a situation whereby and this has been argued in the past, where the unethical assets actually make more money for people, so the bad guys get end up
get
making more
richer
money, get
faster. Yeah,
richer
that
faster.
doesn't seem like a great
Yeah, it
strategy
doesn't.
if you're an ethical
Yeah,
person.
yeah. So and I do tend to agree, actually. If you have companies owned by ethical people, well, no, that's not to say that you're not an ethical person if you own gambling stocks. These are all choices, and they're all legal. But you can apply pressure, I suppose, to do it the right way. Whereas I suppose if you separate it off entirely from ethical
Yeah, I
funds, then
agree.
then there's no sort of pressure to follow
That's the
certain.
point. Is that by refusing to own it, you're just giving up your voice of influencing the board or the direction of the company.
mm.
I feel like if you don't want to own an ethical company, or you think that it's doing something wrong, the way to attack it is by voting with your wallet and not buying its products, or not.
Well, but that's the thing, isn't it? No one really gets much traction with that these days, do they? So
Well, campaign. I think you'll get more out of campaigning using your riches from the the profitable unethical company to petition politicians. Or to,
yeah,
I
I
don't
don't
know.
know. It's
There
an
are
interesting one, isn't it? I can't.
My quick problem with the ethical strategy is this is the question of whose ethics. Like I don't, I personally don't have any problem with gambling. I'm an old-fashioned libertarian. I want to give as much autonomy to individuals as possible. And I would much rather own ALH than own something like Facebook, which is the single worst development I've seen in my lifetime. I think it's the worst product for society that we've made, and all these ethical funds are happy to own that, despite all its nefarious consequences. And they don't want to own a liquor company or a coal
I
business
agree.
or a
The
gambling business. I mean, come on.
Facebook seems the worst kind of unethical in that it's hiding its unethicalness,
Yeah, for
whereas
sure.
at
It's
least the gambling
evilness.
companies are
Let's go
openly
there, Graham.
saying, like, yeah, the gambling companies or drug stocks or whatever are at least openly saying, look, we have a controversial product and we're going to sell it anyway.
Yeah,
But
and it,
all that is a slightly separate point, isn't it? Because what you're saying there is that it's difficult for ethical funds to tread a line that'll satisfy everybody. Um, But going back to Woolies and Endeavour,
Hmm.
by splitting off Endeavour, what they enable is choice. So
Yes. No, you're
the
right
the,
about
the
that. Yeah.
more sort of focused different companies are,
Hmm.
then the more people get to make that choice for themselves. It's just unfortunate that because there's less appeal, there's a smaller pool of people who can buy the unethical companies, the the supposed unethical companies, I should say, because none of this is illegal. Um, they will ultimately quite likely make higher returns.
Yeah,
Hmm.
that's the funny thing with the choice argument is that a company's management is kind of legally bound to do what's in the best interest of the shareholders financially. That I'm not sure if it's that they should be giving the shareholders choice if it's going to lead to lower returns for them.
Well,
Their whole
but the idea is that it leads to higher returns for Woolworths, doesn't it? Oh
so
no,
then
well,
you're just favouring
No,
some
other way
shareholders.
around.
for current Woolworths shareholders. I mean, so
Hmm.
this is the point, isn't it? So Woolworths, the idea is that its rating goes up as a result of the demerger, so existing shareholders make a bit of money, um, but then the company will be set with a lower cost of capital and lower returns. So for existing shareholders, it's theoretically a good deal. And look, I should clarify some of this because I mean the last 10, 20 years, I think most of the evidence is that I mean a lot of the strong performance has been in sectors which are deemed ethical, like pharmaceuticals
Software, IT.
and
Yep.
software, and yeah, that's right. So
Hmm.
some of these suppose gambling liquor type assets haven't actually done, although tell that to aristocrat shareholders, they've
Oh,
done very
yes,
well.
quite.
Yeah.
Right. Interesting point. But let's go back on to Endeavour, JC. I was quite shocked. We were going through the numbers that you outlined in your review.
Oh,
So I was not aware of this, but Dan Murphy's has a 40% market share. I
no,
think I
no,
got
not
this.
Dan Murphy's. That's
Oh, sorry,
um,
the Woolies group, right?
yeah. Well,
Endeavour,
I
yeah.
actually saw a broker note come around today that said it was 48%. They're using
Wow,
different, so
amazing.
in the demerger booklet it was 40%, but the
Right.
thing today I saw 48. So look, it's around there,
And the next
and
closest was a third of the market share. Is that
yeah,
what
Coles,
yeah.
which in the article. Well, I can't remember what I've said there, but I think there are 14% I've said there, but the research I saw today said they were 18%. So
Okay.
I actually think that they're just defining the market probably slightly differently. So,
Right, right. Yeah.
but and within Endeavour Drinks, Dan Murphy's is about 60%. So Dan
Mm.
Murphy's itself is 30-odd%
Mm.
of the liquor market.
And
And
what's
and apparently the difference is not that
mm.
it has more customers, but that it has a bigger,
More drunk customers.
yeah, well, possibly, but they spend more. So per transaction, they
Yeah, right.
spend something like $70, whereas I think typical for the smaller retailers like BWS, Liquorland, and is more like sort of 40.
Mm.
40 or 50. So that really makes the difference. So look, they're very dominant. They've got very strong branding, and I think they'll be seen as relatively strong assets.
Yeah, that was my impression as well. I wasn't actually aware of the numbers, but going through your article, I was quite impressed by the strength of the business and especially that on-premise channel, running liquor through on-premises. I wasn't aware that the margins were so much higher than running liquor through retail
Well,
stores.
they are when we haven't got a pandemic. Yeah, when
Mm, yeah,
when the pubs are open. Yeah. That's fair enough though, isn't it?
yeah, it is
Because
fair enough. Makes
you
sense when
have
you
to
think about
employ
it.
more capital and all that sort
Yeah,
of thing. You have to
sure.
refurbish the pubs in a quite different way.
But this strikes me as
And I
quite
guess they
a
get the pokies revenue in that as well. Oh,
this
no, well, the pokies are in the hotels, in fact.
no, the
Yeah.
hotels. That's right. Yeah,
Yeah.
but this strikes me as quite a high quality business, James. Is it possible that the market has mispriced the drinks and alcohol business inside Woolies? Is your view that this could actually generate a lot of value?
Oh no, I don't think so. I think that I mean, look, the whole of Woolies is pretty highly priced.
Yeah, you're right about that. Actually, yes.
So
Yeah,
currently we reckon it's on a multiple of about 26.
yeah.
Um,
What's the yield on Woolies? I think it's being priced on
oh,
yield more
look,
than earnings.
oh,
Must
yeah,
be two or
look,
three percent, eh?
I don't, I
Yeah,
couldn't tell you actually, something like that. Yeah.
yeah.
Um, so I mean, look, it's quite highly priced. The question is whether you think out of that Woolies is going to get a bit of a premium. I would be very surprised if Endeavour was valued more highly than Woolies, given a higher rating than Woolies. I should stress that this is so the numbers are look. When I was doing the numbers for this article, this should be a pretty straightforward, a bit of research to do and an article to write. But I'll tell you what, we've had, because there are pandemic adjustments, of course. Then if you go back to try, so because of the pandemic, you need to go back and look at 2019, because that's where the last year that the thing made sensible earnings. And then you've got AASB 16, which is very significant because they've got a lot of leases, both groups. And then in 2018 and 2019, they have a bunch of 53-week years and 27-week halves. And so cobbling all the numbers together has been an absolute nightmare. And if anyone finds any issues with any of the numbers, please don't raise it, because I absolutely don't have another couple of days. I just don't have the energy to go and look into it all again.
But
I think I've roughly got it right. But
those small adjustments wouldn't change the aggregate too much.
They wouldn't. But while in one of the at one point I realised, because I'd been using two different halves, which turned out to be 27-week halves, I was actually looking at a 54-week year, trying to make a calendar year out of it. You see, and a 54-week calendar year instead of 50, it begins to make a bit of a difference. That's 4%. But anyway, look, you've got to make all those adjustments. So when you're looking at the PE now, you've got to sort of. So I'm trying to normalize everything and exclude COVID. Wouldn't it be great if we could exclude COVID from everything? But because look, this is this will wash through in a year or two, and so the last year, so whatever the PE is over last year's earnings or even this year's earnings, because the pubs make higher margins, pubs being closed and people then drinking at home instead. If they buy, the money they spend in the bottle shop is only 6% margin, and the money they spend in the pub is 20% margin. So the profits, are understated at the moment due to COVID, and should recover.
So what do you reckon on normalized earnings? I think PEs are probably the right way to look at this stock. What's
well, you can do it PEs, or you can do it sort of. I also looked at enterprise value and EBIT, but it comes out. It essentially comes to the same thing, really. So look, Woolies is on about 26, and I reckon normalized earnings, you'd probably say Woolies will go up to maybe 27. And Endeavour probably go the other way, 24 or something around there. That's my guess. So I've suggested that Endeavour probably start trading around a price of about $6 or $7. And we'll see. That could look pretty stupid. We'll see. Look, we'll confirm the price guides. Look, there'll be more research. There'll be more things to look at. There'll be more. We'll get to know more about it over the next few months, so we'll fine-tune the price guide. We're in no particular rush to buy it, but we wouldn't, Woolworths shareholders, you'll get distributed these shares, and you probably hang on to them at least until you see a final result, I would say. I mean, I wouldn't be rushing to sell them. They're pretty, they're relatively attractive. One comment that's been made on the article, actually, which is something which I probably should have mentioned. I probably should have thought more about it. But a lot of it was odd coming to this country from the UK, because in the UK, if you want to buy a bottle of wine, you go to Tesco's or Sainsbury's or Waitrose, particularly Waitrose, I think. And so the bottle shops have a much smaller share of the market. And the supermarkets actually sell. So if you could imagine, it hasn't happened in many, many years, and the whole structure of the industry is set so that it shouldn't. But with different owners, if suddenly Woolworths and Coles were allowed to sell alcohol, that's not going to be very favourable for Dan Murphy's.
There might be an even more horrific outcome, which is what happens here in the People's Republic of British Columbia, where the government has this clever rule where it doesn't have it sells all the liquor itself. You buy it from the government liquor stores. There are private liquor stores. I know it's crazy. There are private liquor stores here, but they have to charge this extra tax. so nobody goes to them because you always get it cheaper at the government stores. Um, yeah, it's really weird how the
Wow.
BC government owns the liquor business in this province.
Wow, that
Yeah,
sounds
it's
that's a sort of
weird and
throwback to
suspicious.
the rum core, isn't it? What's that?
Yeah, it is very odd. And they own, this is the other thing, they own all the cannabis stores here too. So the government is the one selling the cannabis.
Do they own all the casinos?
I don't think the casinos, but yeah,
They're making their choice, ethical choices, aren't they?
yeah,
Yeah, that's great. I
very
love that. The
strange.
government will get you drunk and get you high. That's awesome.
Yeah.
Well done, Canada. Hey, Graham, let's move on to a company I've been really wanting to pick your brain on for a while, and that's CSL. You've covered CSL for as long as you've been with the business. I've owned the stock for 10 years, and if someone asked me in 2 sentences, can you explain how CSL makes money, even after being a shareholder for a decade, I'm not sure I could. And I think that's actually true for lots of people. I can't think of a stock where there's a wider consensus that it's a high quality business and a greater certainty that very few people can explain what it does. So now that we've got you on the line, let's run through this business in a little bit of detail. Just tell us very simply how CSL makes money, and then we'll go through what makes it a good quality business.
CSL is in the extraction business. kind of like kind of like a miner, only it's tapping people's veins for its booty. If you start at the very beginning of the process, in the US, for a few different reasons that it doesn't do elsewhere, mainly regulatory ones, it has all of these collection centers where it pays plasma donors. So people come in, they donate plasma, they get 30 to $50, and then CSL pulls it all together. And then within that plasma, there's a whole range of different proteins, different antibodies, things that are valuable once they've been separated out and can be turned into a medicine that in many cases will save someone's life, particularly immunocompromised people, people with haemophilia. CSL also has a albumin business, which it sells all over the place for people that need albumin transfusions.
Well, what is albumin?
Albumin is it's actually the cheapest element in the blood plasma, but it's the largest by volume. So um, it's the white proteiny stuff that you would find
Okay.
in an egg.
Okay,
Only you
right.
get it in your blood.
Okay. So let's just summarize where we are so far. So CSL actually this is a really good analogy actually. So it's a mining business tapping people's veins. It takes blood, collects it, and then separates the blood and uses the useful stuff and sells that on. Is that correct?
Yeah, exactly. So our blood is made of thousands of different individual proteins. Some of them are useful, some of them aren't particularly. CSL takes people's blood, pulls it together, then separates out those individual proteins into specific medicines that can then be used for the people that are lacking them or that need them.
Okay. And does it sell the raw ingredients, or does it then go on to process its own medicines?
Most of it processes for itself, but it does. It's the largest plasma collector in the world. It has just over a third market share. So it does sell excess on the open market as well, depending on the need for its own business. But it prioritizes its business as far as I know, and it's just the excess that gets sold off.
And what makes it so good? Is it the fact that it can collect and process more blood, or is it the stuff that it does with the blood afterwards that makes it that you like about it?
Well, there's two elements to it. So in terms of the collection, it's got the broadest base of collection centers, which gives it a lot more stability than the other big plasma collectors. So if you look at some of its competitors like Grifols, they occasionally go through these supply constraints where they can't actually produce enough medicine because they don't have enough plasma supply. Whereas CSL, because it's always selling off the excess, it actually has a very stable base of those raw ingredients that it can then use to make its medicines. So that's definitely an advantage compared to the others. And in terms of the second half, where it's the actual drugs that it's selling, it has a competitive advantage there because each of those drugs is often, is always highly regulated. It has to go through a series of clinical trials. It needs to get various approvals in different regions. That gives it pricing power versus a lot of the competition because in many cases, it's the only drug that's approved for that particular use. CSL in particular has a large proportion of its revenue comes from specialty medicines, which are mostly, they have something called orphan drug status, which is where the government has specifically said at the beginning, before a drug is approved, this is a particular condition that's very rare. It might only affect 500 people or something like that. And then it goes out to the large manufacturers and say, this is kind of figurative, if you are able to make a medicine to attend to this, we'll give you all of these special conditions that allow you to make more money out of it, essentially. You'll be able to charge more for it. You'll be able to have exclusivity for, say, a decade or something like that. You'll get all these extra marketing approvals. So when a company is able to get this orphan drug status, it usually has very, very high margins on what it's selling, because in most cases it's the only company that's allowed to sell it for at least a decade. And
So-
CSL has around 20% of its medicines are under that classification.
So is it a big advantage to put those two sides of CSL? The fact that they're together, is that part of the secret sauce of CSL, or is it really the collection side that can't be replicated easily?
Well, the collection side's probably the part that can be replicated more easily, because a company could accept lower returns by just paying people more to get a larger volume of plasma. So you couldn't collect more from any individual, but you could open more centers, you could incentivize them with a higher payment to try and suck people away from CSL. So I don't think that's an especially strong advantage, though it does work for CSL because it has a very large business that depends on it. Most of the advantage, I would think, is in their research and development arm.
I once covered CSL way back. I was asked, Greg asked me to write it up I think it would have been 2004 maybe. So please, actually, anyone, don't go back and look at that article. I think my conclusion was that it was far too expensive on a PE of about sort of 15 or something. And it's gone up probably 20-fold since then. But my conclusion was based, I think this was before it merged or took over Aventis Behring. And the problem back then was that the immunoglobulin market was hugely cyclical and very difficult. And it seems, from what I've noticed, from what I can tell, that those cycles seem to have essentially stopped. 2004, just as I was writing that up, was about the last one. And is that because the market's now become more concentrated? Is that a result of that merger?
It's the result of two things. So yes, it's partly because of that merger, but also the whole market's been consolidating, so that now there's only kind of three major players and then a couple of tiddlers. But probably the bigger impact is it's not so much demand for immunoglobulins and antibodies is cyclical. That's pretty stable. The cyclicality would come because each of the big plasma collectors didn't know what anyone else was collecting, and so you'd get these booms and busts in collections because they couldn't forecast the demand. Well, they couldn't forecast their own demand, I suppose, very well. However, that changed. I can't remember the exact year, but it might have been, I think it was around 2008 or something like that. In the US, the government, I can't remember the exact details, but they set up basically a centralized agency where these three major collectors then pool their data so that they can actually get an accurate number of how much everyone's collecting and how much demand is needed, and then balance their own collections based on that. So what it ended up doing was just meaning that the companies can match demand more accurately, which took out that swing factor. Kind of like OPEC with the oil industry. They were suddenly able to see everyone else's data and so move in sync a bit better.
That's
I
an
should
interesting
say,
change.
I'm looking at that article now. Hope Springs Eternal to CSL. That was September 2000. It's only 10 bagged since then, so I don't feel too bad.
Whew, that's all right.
It was expensive on a PE of 24. Those were the days, eh?
I know.
Another 10 bag to go.
Yeah. There we go.
So, Graham, it sounds as though you like the research part of CSL the best. And if that's the case, then CSL sounds more like a traditional pharmaceutical business than it does anything more than that. Why does CSL get so much more reverence than your typical pharmaceutical business? Do you think it deserves it? Is it better than, say, an international pharma? Yeah, go ahead.
When I say the research side, I guess I mean not so much what it's currently researching necessarily, but the the side of the business that owns the medicines, which is Behring. Uh, that side there is where most of the profits are made, and then you can think of the collections business as being kind of a standalone entity almost that just happens to supply that side with the raw material that it needs. I think having them together definitely makes sense, and that's a big strength compared to some of the other companies that make plasma-derived medicines, but where they have to buy on the open market, because you do get then fluctuating supply, and it means that you're losing a lot of the margin in those times when supply is low to the seller because the price will go up of raw plasma. Uh, so I think that the businesses are definitely complementary, but in terms of where the money is actually being made, it's being made because of those protections for the individual medicines that are regulated or that CSL has bought the rights to distribute and manufacture.
All right. So, Graham, then why, if CSL has been so successful over this time, why haven't other plasma companies attached a pharmaceutical arm or pharmaceutical arms attached plasma collection? Why hasn't this model been replicated, or can it be replicated?
Well, they do. The other two major uh, players do have a manufacturing arm and also a collections arm.
It's not
Uh,
as good.
in terms of why something like Pfizer wouldn't want it, is it in terms of the blood medicines, they are pretty
Okay.
specialist. Uh, taking something out of plasma, refining it, and converting it to a usable product, going through all of the regulatory processes attached with that, is kind of different to manufacturing a drug where you're often using a man-made molecule and then manufacturing that and
Okay.
then selling it. So they are pretty different businesses, even though the end result is healthier patients. Um, so yeah, I can see why they wouldn't overlap necessarily. And these days, it would be hard for them to combine anyway because they're all the three major plasma companies are all huge. They'd be hard to
Now,
purchase.
CSL has the largest R&D budget in Australia of any Australian corporate. And over the last 10 years, really, they've been able to utilize that to come up with a whole suite of new drugs from the plasma. Is there a limit to how much stuff we can use from plasma, or do you think if CSL spends more money, they can actually get more medicines from the raw material?
There might be a limit to the number of specific proteins and molecules that they can get out of plasma, because that's going to have a cap on whatever happens to be in it. But a lot of their research budget isn't actually just discovering new chemicals or new or taking something new out of the plasma. It's finding new uses for the existing ones. So they're often expansionary clinical trials, which are taking, say, a protein that already has found a use, and then they're looking at what other uh, diseases it's able to treat, often
Uh,
very close and adjacent ones,
uh,
and then going through a set of trials to prove that use for it. It's not just like each chemical has a single thing it can do. It's a lot of the research is going to use the same chemicals in different settings.
my guess is we've barely scratched the surface. Am I right in saying, Graham, 20 or 30 years ago, the only thing you did with blood was transfuse it. Just
Yeah,
use the raw material. I mean, use
yeah.
the actual stuff. And so all of this has developed in the past sort of 20,
Hmm.
30 years, and it's pretty remarkable stuff. It's pretty essential for human health.
Yeah, the big risk to CSL probably isn't running out of interesting things that you can do with the blood. It's that they're getting better and better, including CSL and the other companies, at making a lot of those ingredients uh,
Hmm.
separately as a
Hmm.
man-made version of it, which is called a recombinant. But yeah, that could mean that their collection centers, which have been a big competitive advantage until now, kind of lose a bit of their a bit of their edge, because other companies like a Pfizer or something like that can come in, and it'll be a more similar process, them being able to scale up a kind of man-made manufacturing facility than to go and set up 1,000 collection centers.
So you can synthesize some of these blood proteins in the lab, is what you're saying. I mean, some of them
Yeah, some
you
of
don't
them.
need to. You don't need your collections. Yeah.
Yeah, so if you look at CSL's hemophilia business, if you go back kind of 10 years, it was mostly all plasma-derived proteins. They would go into the blood, they would find a factor 9 or whichever other proteins are necessary to treat hemophilia, and they would extract them and then sell those. Whereas now, kind of half of the business in hemophilia is all
Wow.
man-made proteins.
I guess you see that in
derived ones.
vaccines as well, right? Where even 5 or 10 years ago, all vaccines came from chicken eggs. In fact, I read somewhere that the US has a stockpile, a secret stockpile of chicken eggs that it uses in case it has to quickly manufacture a large dose of vaccines.
Yeah, I thought that was fascinating. I heard that recently as well.
Hasn't helped it much, has it?
Yeah, that
It's completely useless
there's
now, right?
the US government
Yeah, the
strategic
strategic chicken
stockpile,
stockpile.
where they have there's literally 50 million chickens in the US that they have in secret facilities being fed
I just love
secret
the idea
grains, and
of these army rangers, these tough US DoD guys feeding chickens, in their muscly shirts
yeah.
and their berets.
I thought it was so cool that you think about secret bunkers and that holding
Yeah,
nuclear facilities, but
just
there's
chickens.
actually secret chicken facilities.
But now, I mean, CSL itself is a great example of a manufacturer who's moved from eggs to cell-based manufacturing. I would, isn't that a really big deal for CSL to have to face down that risk for the rest of its business?
Well, it hasn't. It does have cell-based manufacturing for the flu vaccine, but that's still only a small portion. Most of it is egg-derived, uh, and that's just because it's more expensive at the moment to actually make them without the eggs. But you would think that over time they'll be able to make that process more efficient, and probably will one day eclipse the egg side, particularly because there's probably a lot of pushback from animal rights groups having no one buys more eggs than CSL, which means a lot of unhappy chickens.
Surely the trend in medicine, though, is more cell-based therapies rather than blood-derived therapies. Am I right in saying that?
Well, I don't know. It depends how you define it, I guess, because
This is the problem we're talking to
they're
a
finding
scientist.
more and more things in the
Everything
blood that are
depends on
useful.
something.
Yeah, well,
Yeah.
that's the real world.
Yeah.
Yeah, I think that, I don't know. I'm not sure that that would be true, but you would have to think that there's an unlimited amount of human creativity, whereas there's only a limited amount of things that you'll find in the blood. So it probably will be more man-made things over the long term.
Okay, well, as I said, I've held CSL for 10 years, and the tricky thing about CSL has always been valuation. I remember when I bought it, I felt really uncomfortable. It was the most expensive stock I'd ever bought, and holding it over that period has been a real disciplinary exercise because it's always looked expensive. I remember I almost sold it about 80, 90 bucks. I remember, I think I talked to Nathan at the time, who was the analyst, and I said, I'm going to sell CSL. It's $89, as if it's going to double or triple again. And he said, "Oh, I don't know, mate. Maybe just hang on to it. It's pretty good." And luckily I did. But how do you, I mean, we don't want to go through the whole valuation process now, but is it a buy now? We've been moving our price guides up on CSL. It's a tricky business to value. And what are your thoughts on valuation?
Yeah, it's funny. It's the one stock that I cover that I am just itching to upgrade at some point. I feel like it's the
The last
last
frontier.
the last great company that I haven't actually had a buy on. But yeah, it does always look perpetually expensive and then perpetually beats your expectations. So I don't know what you do with those kind of companies.
So what is
feel
the PE at the moment, just roughly speaking?
I think it's 47 or 46 or something around
more
that.
than
So it's
24
But don't they run
Yeah,
$1
it's
billion through the of R&D through the P&L though? So take that into account.
yeah, but
But they've got to spend
that is a
That's-
real expense.
that gives you the growth.
Yeah, otherwise their medicines will go
No, but
generic
most
and
companies
they'll
would
be unable to actually
would
keep them.
put that on the balance sheet and amortize it though.
Yeah, so you got to put
Well,
it on but then you have to
Sure.
amortize it. So it's a
Yeah.
question of whether it goes directly
Yeah.
through or whether it gets
But the point is
smoothed,
that
isn't it?
that
So
PE is probably looking a bit higher than it would if the accounting treatment was a bit different.
well, yeah, it would, but I think that what they're spending on research and development is a necessary expense, so you can't go cutting it
No,
out.
no,
They're not
not
going to
suggesting
change
that.
that.
Yeah, but only that.
no, but you'd still have to amortize it. Anything you put
Of
on the
course.
balance sheet
Yeah.
does then
But there's a difference in
does then need
amortizing
to be
200
amortized.
million
Yeah.
and expensing, 1.2 billion or something.
The tricky part with the drugs is that such a huge portion of the expense is in the research when they don't actually know that it works. So most of CSL's research budget is going to phase 3 trials where they still haven't actually proven conclusively that the medicine does anything. But once it gets out of that, then they can they can capitalize the development costs of actually uh, everything beyond the kind of clinical side. Uh, so yeah, most of it is actually research, and I think that's justified.
And I guess a large portion of that $1 billion spent on research actually doesn't end up producing anything anyway. So a small part. And hence why it doesn't get
Yeah,
capitalized. I suppose if you did capitalize a lot of it, as well as amortizing a bit every year, you'd probably have to write some of it off from
Which
time
most
to time
companies
as well.
do. You see
yeah,
that going all the time.
Yeah, well, that's
Yeah.
right. Yeah.
yeah. Fewer than I think 1 in 10 drugs at most would get approved after they've started phase 1
Right.
clinical trials. So those initial costs are just an
You
expense.
can
They may
only
not
you
earn
can only
anything on them.
capitalize it once you've got a
Yeah,
definite
it's
product.
not really an asset yet.
Now, the most important question, Graham, is I've held this business for 10 years. Should I buy more? Should I sell it? Or should I just hold it?
Don't think, just buy.
Well, that's been the right answer for 10 years, though.
Take part profits. That was my advice in 2004.
Yeah.
Hence why I'm asking Graham.
It is a tough one.
Yeah.
I mean, yeah, it does look expensive, but at the same time, I wouldn't be selling it at today's price. I'd probably be sooner buying it than selling it. But it is the kind of stock. I remember it must have been at least 6 years ago now. One of our members wrote in and they were saying they'd bought it at the float.
Wow.
And had it. It was now like a 50% of their holding or something like that. What should they do?
That's a harder question as well.
And yeah, it is, because I think exactly. That's the only answer.
With these things that go up over or outperform over years and decades, you do have to take some money off the table from time to time. Otherwise, they end up taking over your entire portfolio. And
you don't want to be 100% in CSL, but at the same time, if you own some, then I wouldn't want to be 100% out of CSL, I guess.
So talking of which, price guy, our recommended maximum portfolio weighting 7%. So there you go. That tells people something.
Right. Anything else to add on CSL JC, or should we move on? That was really interesting, Graham. Thank you. Finally got to the bottom of that. Been waiting to sit you down in a room about CSL for a long time.
Shame we didn't have you covering it back in 2004.
Well, I'm still waiting to upgrade it, so maybe I wouldn't have done any better.
Yeah. Well, it's not that these ones aren't easy. It was on a P of 24, so.
Now let's go to something much, much easier, which is AMA Group, which is one of mine. Now, where to even start on this thing? So we upgraded AMA. I think it would have been around just after March, right? April, May, somewhere around there, when it had fallen a long way from where it was. I actually took it to the Dragon's Den. It was $1 a share, and thankfully, you fellas talked me out of it, which was.
I don't think
you may not have been there. It was. I remember JG banging down saying, "Absolutely not, no way, not at $1." And there was a big argument, and we went back and forth quite a bit. And he was gracious enough not to say "I told you so" when it all crashed. But the concern really was margin, holding on to margin and balance sheet. And balance sheet has been the big problem really for them, because they've probably paid too much for a major acquisition and taken a lot of debt to fund it. And so we upgraded AMA knowing that they had probably a bit too much debt, but thinking they could handle it. They had some excess assets they could sell, and they had contracted revenue, which should throw out a bit of cash flow to pay that debt off over time. So it's been traveling okay, I suppose, until the pandemic really, really got just continued going. And the recovery has just been very slow, and it's been slow for several reasons. None of them have to do with the number of accidents being counted. We all know that people are back on the roads, traffic numbers have increased, there's been plenty of wet weather. And the two things that influence car accidents more than anything else is the volume of traffic and rainfall. Once you have those two in combination, you're almost guaranteed to have accidents, and we've had plenty of both. So we should be seeing really good volumes going through AMA stores
Where's it located? Is it mostly New South Wales or is it
all
all
across
across Australia?
Australia. But New South Wales and Victoria. Victoria is its single biggest market, and New South Wales is its second
Right.
largest one. Now, these guys make volume deals with the big insurance companies. There are two big insurers, NRMA and Suncorp, or well, as their listed entities, Suncorp and IAG, which control 80% of the claims market. And AMA Group makes deals with those guys to guarantee volume through their shops. So it's probably a better protected business than it appears to be. But we were just getting a few red flags just popping up here and then. The first red flag was when I woke up one morning and found out that the CEO had been sacked for misconduct, and whenever that happens,
What was the
well,
misconduct?
it's gone back and forth. So apparently, overpaid bonuses, unfounded expenses, taking money from the company, all these things. But then he countersued the company and said that some of the directors were actually doing exactly the same things. And then a whole bunch of other
Mm.
allegations came out about lots of line managers and senior executives doing exactly the same thing. And his following, which I remember we had the big discussion about this internally and wrote an article about it. When he left, we thought, look, it's one person leaving. These are pretty small sums of money in the scheme of things. We've got a safe pair of hands taking the new CEO role. And the price seemed still reasonable. We should have good volumes of accidents running through AMA. My view was that we're probably okay to hold, and which we did. But then lots of other bad news kept on coming out, and it was just a little. It was no giant red flag, but it was a whole series of little red flags that just kept on coming out from trade publications, from people we were talking to, and from other sources. A couple of those was that we heard that AMA had lost two insurance companies as customers, which really should not happen, because when AMA picks up an insurance company as a customer, it actually it integrates into the administration systems and back ends of that insurance company, so it can actually process claims directly for the insurance business. And that level of integration should mean that it's quite hard to get rid of AMA as a vendor. But the fact that two insurance companies had cut ties with AMA completely, that was scary. And within the same breath, we also heard that its largest customer, which is Suncorp, which is NRMA, IAG, they had started up their own repair shops. It was a panel store network called Repair to Go, I think it's called. They've got 6 stores in the network, and they're doing exactly what Capital Smart was doing. They've set up machines that do low damage, high volume repairs. And so it looked as though that NRMA was getting ready to either negotiate really hard with AMA or to even take volumes away from them. And these contracts come up from negotiation every 2 or 3 years, so there was every chance that could happen. But the thing that really nailed it for me was that we kept on reading in these in trade journals that there was a mass exodus of senior executives from AMA, and that for me,
They weren't getting their bonuses anymore.
that for me is one of the biggest red flags of any business. When you have senior people leaving, remember when you're looking at it.
After the CEO leaving
Well,
for
the CEO, yeah,
misconduct.
and after the CEO leaving, but the CEO, I mean, CEOs
Yeah.
leave all the time, right? We see that all the time.
Not, but they don't tend to
Oh,
get
plenty
sacked.
plenty
I
of
mean,
CEOs get sacked. Yeah.
Well, they get set, but not for. I mean, normally
Yeah.
for poor performance rather
Well,
than for
yeah,
risk
but
behaviour. I
listening
mean,
to the stories of
anyway,
both CEOs,
we don't know that. We don't yet. The
yeah,
allegations are
there's lots
still.
of stuff going on there. Yeah,
It's all
but
in court, isn't
when
it?
a whole bunch, and we're talking dozens of senior managers start leaving, that tells you something is awry. I remember reading. You guys read that book about that Theranos company. What's it called? Uh, Bad
Theranos?
Company, I think it's called. Bad Blood. Sorry,
Oh,
Bad
Bad
Blood.
Blood.
Yeah. So Bad Blood is a book about Theranos, which was a big fraud. And one of the things that came out in that book was just the very high turnover of senior staff. Because once people join a business and they learn about what's going on the inside, good people generally don't want to stay in really terrible businesses or businesses that aren't going anywhere. And so you get a big exodus. And it's always been something I've remembered. It's a big red flag. And when that started happening, along with all the other things we saw, decided just to take our losses and sell at that point. Now, since then, AMA has come out with a upgrade to say that actually volumes are returning. There are all sorts of staff shortages because AMA actually relies on international staff that brings over on 457 visas, and none of those people are coming. There are big staff shortages, but we should be able to manage okay. And they ruled out a capital raising, which I thought was one big risk. And the shares have bounced. So the question really to be answered is, was the sell decision a mistake? And I'm going to say no, it was not. Not just because it was my decision, but because investing is a tricky thing where I don't think we can measure success or failure by the outcome, and that's really counterintuitive because most things in life you look at the outcome, then you go to the decision, and you decide whether your decision was good or bad depending on the outcome.
Well, the point is that the outcome has not yet happened. I mean, you do judge investment decisions by the outcome over 20, 30 years, but I suppose your point is even then,
yeah.
all you can do is make a bet on the
Yeah.
odds, and
Well, because there's
yeah,
so
that's
much
right. Okay.
variability in investing outcomes, right? It's not just your the things that are going to influence the outcome. It's a whole bunch of things you don't know and can't know, and so you've got to make a decision based on the information you have with you at the time. And you go back and look at that list of red flags. If there's an error there, I
Yeah,
think the error
yeah,
was not acting faster.
yeah. Yeah. The way I've described this in the past, in fact, is because I'm now understanding your point a bit better. But if you make a bet on
Yeah,
Manchester
love this
United to
example. I've
beat
used this.
Altrincham in
Yeah,
the FA Cup, if you get a chance to make that bet at evens and you back United, then that's still the right bet to make, even if Altrincham pulls
correct.
off the biggest upset of all time
Yeah,
and doesn't make the original
yeah.
backing of Manchester United to beat them the wrong decision.
And
So.
if you back
Um,
yeah, and if you back the other team, the lousy team, that's
Altrincham, they're,
that's
they're
but
fine. They're lovely.
that's almost that's a bad decision,
They've
even though
went
you may
bust
have
actually.
won
So okay.
the outcome. Do you see my point? So
Yeah,
you can
yeah, that's right. Yeah,
so
that's right.
there's a wider point here that it's not just related to AMA, it's a wider investment point, and that is that as an investor, your outcomes they aren't necessarily a comment on your decisions. You've really got to judge your decisions based on the information you had at the time, and was that the right thing to do at the time? And I would argue what we're doing with a lot of our decision making is pattern recognition. We're looking for patterns, and sometimes those patterns lead to the right outcome, and sometimes they don't. But you've got to stick to some sort of process, and you've got to stick to a repeatable process. And I think when we look through to what we were seeing with AMA, we probably should have acted earlier, if anything, and probably should have acted earlier rather than be more patient with the business. Probably should have been less. But there was when you have a whole series of little red flags piling up, I think that necessitates action. And doing nothing in that scenario that's probably the wrong decision. I don't know if you guys have thoughts
I
on that.
think the thing is that you don't have to be invested in every company. There's a couple of thousand or more stocks out there, a few hundred, which you could call fairly mainstream, and you've got to pick a few of them for your portfolio. My experience is that when there's cultural issues with a company, you tend to get bad
Yeah.
surprises. the good surprises tend to come from companies which have great culture, great management, great everything's clicking along. What's that Tolstoy quote from Anna Karenina?
Happy families?
About happy
Yeah,
families all being
so true.
alike, and unhappy families being unhappy in all their different ways, something like that. And unhappy companies, they just tend to throw up a lot of bad surprises. Now, it's only been a few weeks with AMA, and it's bounced, and so there's been a pleasant surprise. But there's a long way to go with it. But however it turns out, I think if you're tending to back companies that have strong management and culture as opposed to the opposite, then I think you're going to be in better shape.
Yeah, no, I completely agree, actually. Yeah.
Because I think the market doesn't. The market's obsessed with other
Obsessed
things.
with
The market's,
numbers.
focused
Yes,
on numbers in the
that's right.
short term, and thinking about the management and culture and longer term
Mm.
opportunities and is not what it does. So I think the market tends to overlook these shortcomings, and underestimate the importance of good culture here.
Graham, we've gone on for a while. We should probably end soon, but anything to add on Tolstoy?
No, I've just been silently
Okay,
nodding.
excellent. Good. Glad to hear it. All right, so let's close this off. And Graham, thanks so much for bringing CSL to the table. We'll go through some of your other stocks which have baffled me for a while, and pick your science brain at another stage.
I'd like to hear lots about
Oh,
Ramsey,
there you go.
but
All right.
that's
We
good
might do
outline
that
for the future.
soon as well. Okay. Yeah, you're right. That's one that I've never really understood either. Haven't owned it though.
Sounds good.
I'd rather talk about one that I've owned, Graham, if that's all right. No, I'm joking. I'm joking, of course.
one
No,
that's
yes,
back for you, yeah.
of course, I'm joking. Okay, we'll definitely go through Ramsey. Okay, Graham, thanks for joining us at an odd hour. Appreciate your time.
Thank you, Gaurav.
And JC, as always, thanks for your time as well.
Cheers, it's been a pleasure.
For everyone else, thank you for listening.